Morning, everyone. Welcome to our event with Manchester Credit Union on preventing poverty. The event will focus and explore the support, resources and tools available to employers and employees to prevent poverty. The event is very timely following the news and updates in the spring statement, as many individuals are already starting to feel a squeeze with rising bills and increasing costs. So today we've lined up 3 brilliant speakers who will provide information, advice and raise awareness of services that business and individuals can explore to prevent poverty. So each of our speakers will present for 10-15 minutes, and then we'll have some time at the end for some Q&A with each of our speakers. So you're welcome to wait until the end to ask any questions, or feel free to pop them in the questions box and we'll pick them up on your behalf and direct them to the speakers. Firstly, I would like to welcome our first speaker, James Kelly. James is the Regional Partnership Manager from Money and Pension Service, MAPS. James has significant experience helping people with their money, and MAPS is a government department which provides free independent support so people can make the most of their money. So James is going to highlight some of the services that MAPS provide, and I will welcome you up now, James.
Okay, good. Thank you. The classic start there where I managed not to take myself off mute. So good morning, everyone. Thank you for the invite, both from GM Chamber and I know Manchester Credit Union were very heavily involved in terms of putting this session today this morning. So thank you for the invite. I know there's some people on the call that do know me and I've dealt with and MAPS working in partnership with and supporting currently, but I also know there's many people on the call looking at the attendee list this morning who don't. So what I've done is tried to focus in the 10 to 15 minutes that I've got around the tools and the support that we provide as an arm's length government department to partner organisations, the tools and content and information that we provide, and with a little bit of a focus obviously on the current pressure, the cost of living pressures in terms of fuel prices, energy prices, food prices and things of that nature. And there's also just a bit of a summary, a little bit more about what the partnerships team, which I work for at MAPS, does, and how we engage with organisations across not just Greater Manchester, but across the northwest of England and wider. So could we just move on to slide number 2, please? And I'll just give a quick summary about who the Money and Pension Service are. So who the Money and Pension Service are and how we can assist. So we tend to call ourselves MAPS because the Money and Pension Service is quite a mouthful. So to make it a bit easier, we tend to call ourselves MAPS. And our role is we're here to help people access the guidance, the information they need to make effective financial decisions throughout their lifetime, at whatever stage of the journey they may be in, at whatever age they may be. So that might be people in their teens, that might be people in their 20s, 30s, 40s, 50s, 60s, and people who are retired. And we have a consumer service called Money Helper. We have a big website, a free independent website, which is a really easy way to get impartial money pensions guidance that's backed by us as the government. Now, the other bit that I just wanted to make mention of this morning is just who we are part of. So we work very closely with the Department of Work and Pensions, with DWP, but we don't do benefits. We're not as big as the DWP. The DWP, as most of you will be aware, has tens of thousands of people. We have about 370 people right across the whole of the UK. I'm not based at our head office in Holborn, I'm based up here. And we also engage and work fairly closely with other government departments, people like Cabinet Office and Treasury. And we do that so that when things like the changes in the budget occur this week, that Rishi announced this week, we can update our information and get our information, our websites and our content as accurate as it can be, as fast as it can be, which my colleagues in London are working flat out on at the moment to make sure that all the content and information that we have is as updated and accurate as it can be. So can we just move on to slide number 3, please? So one of the things I said I'd talk today about, and it is a bit of a whistle-stop tour in 10 or 15 minutes, is this current pressure, this real financial pressure that people are feeling, not just in Greater Manchester, in the northwest, across the whole of the UK, to be quite honest with you. But we said we'd have a bit of a focus today just to kind of contextualise that and see what we think about that as an organisation, both in terms of the work that we do in the Greater Manchester region, but also on a wider basis. So, scale of financial challenge for people in Greater Manchester, really significant. You've got more than 620,000 people currently living in poverty. And there's a lot of pressure on that number, simply because costs, bills, inflation are all rising due to the impacts following the Russian war in Ukraine and also the COVID pandemic. So you've almost had a bit of a perfect storm, and these financial stresses and pressures are ever increasing. Now, I've worked one way or another in terms of supporting people and communities and housing and vulnerable customers for about 30 years. And even after the financial crash, I've never known prices 15 years ago. I've never known prices and inflation be under such pressure as it is at the moment. So that's the kind of contextualize of it. What does that actually mean on the ground? What does that mean to people? What are those kind of numbers? So from the research that we do and the access to government figures that we have, we know that those kind of pressures create what we call poor financial well-being. That's people are under pressure, under financial stress in different ways for tens of millions of people. And I just like to always give people the big figures in terms of that, just so they can see what the scale of the challenge is, not just locally or regionally, but across the UK. So there's about 52 million adults in the United Kingdom at any one time. And of those 52 million, about 9 million of them are either missing payments or they're feeling like keeping up with their bills is a really heavy burden. In other words, they're effectively in poverty. They're struggling with their finances. It's something that keeps them awake at night. It's something that they worry about day in, day out, week in, week out, month to month. And then beyond that, there's an even bigger figure of 11.5 million people, so 11.5 million adults, so that's over 20% of the adult population, who have less than £100 in savings. So what that means is that they have no fallback position. There's no what we call MAPS, a rainy day savings fund. If there's any pressure, something goes wrong in their life, they come home from work on a Friday evening and the washing machine has failed and the motor's gone and it needs a new washing machine from Curry's, and that's £340. They just simply don't have that in savings. They have to put it on an overdraft, they have to put it on a credit card, they have to put it on a buy now, pay later scheme like Klarna. And then 24 million adults don't feel confident about making decisions about financial products and services. And that's a big pressure for people, including people in poverty. When you look at people who are struggling in financial difficulty, the percentage of people who are struggling and actually struggling to feel confident about those kind of products increases. And that's the one that I always think is the most shocking figure. That's nearly half the adult population. So that means they're not confident or have full understanding about things like perhaps when they choose a credit card, perhaps when they're saving, or perhaps crucially when they're saving for retirement for their future for when they're older. So that's a really big figure, and those give you an example of the scale of challenge that organisations face in terms of supporting people, and also the scale of challenge to individuals on the ground. Can we move on to the next slide, please? So I said today I've only got 10 or 15 minutes. I just try and show some really practical information in terms of what we provide and kind of tools and information that we provide. And I'm going to focus down on a couple today. I know some of the organisations and contacts and stakeholders are on the phone and are on this call this morning. Are already using some of these tools, but I'm going to have a look at the budget planner. The Money Navigator is a relatively new tool that we built that really looks for signs of financial stress and helps people get further guidance, maybe that from us, be that from partners like Step Change Debt Charity or Shelter or DWP. But I'm going to look at a couple of particular tools that we have today. One of the things I just want to say about the tools and calculators is the information that we use is interactive. And what we mean by that is it's tailored the result to an individual. So when an individual that you're perhaps supporting or working with uses the information and the content that we have, it's a tool or a calculator, they're going to get a situation and an outcome that's tailored to them as an individual. The other thing that I'll say about all this information is it's shareable. We deliberately design it so that you can use this information within your organisation. Now you can do that in one of two ways. You can either link through to that information, which literally thousands and thousands of organisations across the UK choose to do, or you can take what we call an embed code and syndicate that information onto your website. And the advantage of doing that is you can place it wherever you want on your website. The one thing I would say about all that information is whatever we provide to you, everybody gets the same information, because we have to know there's consistency in terms of how that information is being delivered, and that every organisation that we work with is getting access to the same set of content. So let's have a look at some of the tools. Can we move on one more, please? So how we build the tools is into our Money Helper website. So Money Helper, as I mentioned earlier on, is our big brand that we use in terms of engaging with people. And what we do with the tools is we build all the content, we build all the tools, and then we load them into our Money Helper website. Now, Money Helper is one of the biggest financial assistance and money websites in the country. It's designed to take lots and lots of traffic, and it can do that and cope with that, and has consistently done that throughout the pandemic. Right at the start of the pandemic, we had some exceptional volumes, and the system never failed once. So from our side, this is where we put all the information. I'm not going to go through Money Helper because I just don't have enough time in 10 or 15 minutes today. But I know a lot of you on this session this morning will be familiar with that website. But if you're not, the link is at the bottom of that page. And I'd really encourage you to jump on that website and have a look at it. Can we just move on one more, please? So what we do when we have tools, when we create tools, is you can see on the right-hand side there in the kind of magenta colour on the third column, is we build them into the relevant sections of our website. And that's why I wanted you to see the website this morning. So you can see there, we're actually on the everyday money section, which covers things like banking, budgeting, types of credit, key costs, things like buying and running a car that we know affects many people and many households and many families. That's all the kind of written content, all the information, all the slides, the videos, all the ways that we engage with people. The tools, we never have quite as many tools as we have content for obvious reasons. But the tools are on the right-hand side. You can see in three magenta colours there, we've got a comparison tool for bank accounts, a budget planner, which we're going to have a look at it in a bit more detail in a moment, and a credit card calculator. So for every one of those sections you look at the top there, things like benefits, things like everyday money, things like money troubles, there'll be a set of tools that will assist and help with that information. And this is one of the key ways that we try and help and assist people on the ground and help the organisations that are engaging with those people. Can we just move on one more, please? So I said today I'd have a look at, crucially I wanted to look at two sets of tools really. One is the budget planner, we're just going to have a look at over the next few minutes. And then the next tool is a really new tool, which we've actually only launched on Wednesday this week, so 48 hours ago, which is a new bill prioritizer tool that we've built in response to all these financial pressures in terms of inflation, fuel costs, food costs, and things of that nature. But I wanted to start with the budget planner because this is one of the most popular tools that we have. And it's what we see as a kind of foundation tool. And what we mean by that is that we want people to have access to a budget planner because we know that when consumers and people, including people in poverty, use a budget planner, it helps them crucially understand what their incomes are and their outgoings. It gives people a way of recording all their spending, breakdown of their finances, and what we also do is we provide quite personalised tips and hints at the end of the budget planner to help people make the best and the most effective usage of their money. The other thing you can do is you can access your Save It budget planner as an individual. So our system, we use government servers. One of the things I wanted to say about the data, really crucial, we're not harvesting people's data. We don't sell people's data on. We're not a comparison site, like say Compare the Market or Money Saving Expert. Our job is to assist people and give them the best independent advice we can. So both yourselves and the people that you work with and people who are struggling or in financial difficulty can have real confidence that if they come and use that budget planner, first of all, their data is not provided to anybody else, nor does it create something like a soft credit search, which a lot of the comparison sites will do. So let's just have a look at what the budget planner looks like, and then we'll just move on because I'm conscious of time in terms of the new bill prioritizer. So can we just go on one more, please? So, online budget planner. Many of you will have seen these before. Many of the organisations we work with take and use and access this, whether they're housing associations, whether they're councils, whether they're employers, whatever they may be, credit unions, lots and lots of organisations. It's one of our most popular tools. The three boxes there you can see, 1, 2 and 3. The bit on the left is fairly straightforward in terms of it asks for somebody for all their information in terms of their incomings, things that they may be receiving in terms of pay, in terms of benefits, in terms of savings, whatever they may have. In the middle is a calculator, which once it's taken all that information, it will give a very visual outgoing. What we are keen on at MAPS is not making things feel very banky. We don't want to make things feel really financial services or very jargon filled. We want to make things really straightforward for people to use. So it will give people a breakdown of what their finances look like in a very visual way. And then the third bit is really important. You could say, well, James, lots of budget planners do number 1 and number 2. And I probably agree with you. I used to work at Lloyds Bank before I worked for MAPS, and we had a budget planner that did that. But the third bit is probably the bit where we're a bit different at MAPS. The thing they will then do is we'll then give people personalised tips to help them make the most of their money, ways that they can save money, and crucially ways that they can cut their costs. So one of the things that we often find when we see budget planners is people, as I said earlier on, really good at knowing what the big numbers are, but they might forget that they've got that smartphone, that Apple iPhone from EE, and actually the cost of that is £37 a month, and over a year that's nearly £450 per annum. Or that they've got a gym membership with the local gym down the road, and that's £25 a month. And it's those kind of things that people forget. We're not the Grinch. We're not asking people to remove all the nice things from their lives. But what we do is try and make them think very hard about that, and perhaps suggest, can you go from EE to perhaps Tesco Mobile and cut your bill? How can you make your money work harder and more effectively in these really tough times? Can we just move on one more, please? And the other thing I said I'd show today is literally over the last 48 hours, we're just launching our new, what we call our Find Your Way Forward campaign. Everybody knows there's massive pressure, particularly over this last winter and this spring months, about increased fuel, heating, energy and food bills. And with all that uncertainty, the big challenge for people is this doesn't look like it's a blip. It looks like this is going to be with us for months, if not the rest of the year. So we've developed some new content and media assets to help with these concerns under the theme of Find Your Way Forward. Now the link is on the next slide. Many of you won't have seen this content because it is literally 48 hours old. And we'll also be launching extra content over the coming kind of fortnight to support that, and things on social media and LinkedIn and Twitter. But I wanted to show you the initial stage of this campaign today because it's really important. We'll just jump on one more. So we've got a new bill prioritizer tool. I can't take you through all that today because of the time, but you can see that the link to the Money Helper website is at the bottom there. But really that's about helping people to get a close track of those different payments that they have each month, select what costs and bills they're struggling with and prioritise them accordingly, and also get assistance. Now you can see there's all the various types of costs that are there within the bill prioritizer. The one thing I'd say about the bill prioritizer, you'll definitely be able to link to it. We've built it so quickly, normally it takes us about 6 months to build the tool, that we can't syndicate it to, partners, organisations yet, because we just simply don't have the IT resource to do it, and we wanted to get this out as fast as we possibly could. But that's a new tool. We're already getting really good traffic with it. As I say, it only launched on Wednesday, 48 hours ago. And for those of you who are interested, I'd be really encouraging you to jump on the link, have a usage of that. I've done so myself, and see how you think that you might find that that's useful. And we're not naive as well. We understand that people have challenges, and the tool alone doesn't solve the challenges, but what it does, it starts to get them engaged with that problem. Reed, can you just run one more? And I'm conscious of time. I will wrap up. I'll have my little third section. And then the final bit that I just wanted to mention today is, in addition to Bill Prioritizer tool, there's a new section about squeezed incomes for all those people struggling with saving money on household bills, how to pay for essential things, help whilst you're working, and also the mental health pressures that these create. So again, if you'd like to look at that information, or if you want to speak to me after the session, on a one-to-one session with your organisation, we'd be very happy to have a conversation with you about that. And that content, again, went live 48 hours ago. Final page 3, please. And that's just all the summary information for me in my 15 minutes. It just really confirms what I said earlier on. All free information, our website, our WhatsApp, and our free phone telephone number is in the middle. And right at the bottom are all the contact details for me and all the types of organisations we work with right across North West England. That's me bang on 20 minutes. Well, not 20, I had 15 of 20.
Thank you, James. Super comprehensive overview and an update on the Money Helper, the Budget Planner, and the Find Your Way Forward, and the Bill Prioritizer, which I think will be super useful for many of those on the call. I know a number of you have asked for access to the slides, so we will be sending out a short summary, including the slides following the event, so you'll have all the information that we've talked about. You'll have access to all the information that we've talked about. So thank you, James. I would like to welcome our next speaker, Kath Wohlers. So Kath is the liaison manager with the England Illegal Money Lending team, where she's worked for 14 years. So she oversees the team who support the victims of illegal lenders and tries to prevent people from falling into their grasp. So she analyses trends in illegal lending so the team can respond and represent the team at national events and in the media. So over to you, Kath.
Thank you very much. Good morning, everyone. As you say, my name's Kath Wohlers. I'm the liaison manager with the England Illegal Money Lending team. Very randomly, I work for Birmingham City Council, but I actually live in Lancashire. We all work from home at the IMLT. Next slide, please. So current financial outlook, going on from what James was saying, 22% of adults have less than £100 in savings, so very little financial resilience. This is key to us because obviously that means people are at risk of using loan sharks. Closure of Provident, who were a doorstep lender, they still exist as a business, but they no longer do doorstep lending, and they had a massive reach into communities, lending relatively small amounts of money, maybe £500, £1,000, and collecting door to door, which was a way of life for some people and some communities. The same with Satsuma loans. An increase in utility costs, an increase in interest rates, and recent research released this week says that there's an estimate of 1.08 million people currently today using loan sharks in England. That's gone up from 310,000 households in the UK 12 years ago, and that was in the whole of the UK. So a significant rise in people using loan sharks or illegal money lenders. Next slide, please. So what is an illegal money lender? The actual sort of definition of what a loan shark is someone who lends money without authorization from the Financial Conduct Authority. And what that looks like is a very hidden crime happening in communities, and it's often masked as loans between friends. We have had cases in the workplace. 10% of the people we prosecuted last year, the victim met the loan shark in the workplace. This is something that is happening in workplaces. And it has a massive impact on people's mental health and well-being. So it's not just a financial problem. It can be much, much wider than that. We had a case of a local authority in the southern half of England where the loan shark was lending to colleagues, and it turned out that the colleagues ended up not coming in on payday because they were really scared of the loan shark. They were really scared of being shamed, of being ridiculed, and of wider threats than that. So there was a massive, massive pause and disruption in service because there was a massive sickness boost on the payday because people were avoiding the loan shark. Next one, please. So we are the illegal money lending team, which does not mean I lend money illegally, although it sounds like it does. We have the remit to prosecute loan sharks in England. There is also a Welsh team, a Scottish team, and a Northern Irish team. We are primarily a criminal enforcement team. We're a trading standard service, and that means we go out and we arrest loan sharks. That's our bread and butter day-to-day work. We're there to investigate, identify, and prosecute loan sharks, bring them to justice, and take them through the courts. It is a criminal offence to lend money without the authorisation from the Financial Conduct Authority, currently with a sentence of 2 years in prison, although there is a campaign at the moment to get that increased. The team I manage is the liaise team, so we do all the victim work, all the witness support, lots of research, and trying to stop people going to loan sharks in the first place. Next slide, please. Loan sharks is different from high cost credit. So we've probably all seen the adverts on the television and balked at the APR that we see being charged there. But loan sharking is very different. Loan sharks don't give paperwork. Quite often they will quote double bubble. So they'll say you borrow £500, you pay back £1,000, although that will rarely happen. And they won't give people any sort of paperwork or consumer rights whatsoever. If you borrow from a high cost credit provider, they have to follow the rules. They have to deal with you fairly if you challenge them about what you owe. They have to give you payment breaks. They have to work with you around debt. Loan sharks don't do that because they operate below the radar. We as an authority prosecute for every single crime that we commit then, we come across, which would involve things like blackmail, and also in very extreme cases, things like rape and assault and even firearms offences. But I always say there is a spectrum of illegal lending. Some loan sharks are very friendly. People genuinely believe they're borrowing from a friend. They will still rip people off. They still don't have any consumer protection and they're still not paying taxes on what they earn. But maybe a bit less pernicious than some of the very threatening loan sharks we see who turn people's lives upside down. Next slide, please. So does illegal lending happen in the workplace? It absolutely does. Illegal lending is something that we see in all sorts of communities. When I started, it was very much kind of estate-based lending, people, maybe single mums in social housing, but it's a much wider reach than that now. As I say, 10% of people we helped last year met the loan shark in the workplace. They were a colleague they were borrowing from. And sometimes that goes with a power disparity. So for instance, if it is a boss who is lending money, that has an impact on people because there's another threat there of I'm your boss, you better pay me back. Quite often it's something that would go under the radar. People might not see it happening. We've had it in distribution centres. We've had it in local authorities. We've had loan sharks in all sorts of different workplaces. And in terms of victims, over 50% of the people we support are in work. So even if they don't meet the lender in the workplace, it can still have a massive impact on them in terms of mental health, sickness, stress, time off, and so on. One of the common things a loan shark will do is sit outside someone's place of work as a way of threatening them to make sure they carry on paying, because they don't want that shame, they don't want disgrace, they don't want doubts to be brought into the workplace that maybe they're in some sort of trouble, and they might need help and support. Next slide, please. So this was a guy we prosecuted a few years ago now. His name was Dr. Savani. He's a hospital consultant. This is a Southern of England case. He worked for Middlesex Hospital. He lent over £1 million to 90 people who all also worked in the hospital trust. So there's the disparity of power. He was a loan shark for 5 years. He said he could have got authorization to lend money, but he chose not to do so because it would have curbed his money-making activity while he waited for authorization to come through. He operated from his hospital. He had profits of over £250,000, payments of nearly £1 million, and we actually took over £500,000 proceeds of crime off this man as part of the prosecution against him. So that's an example of workplace lending. No one, apart from the victims, had any idea that that was going on in the workplace. But you can imagine if he did something wrong and the person who observed him doing something wrong was someone who owed him money, that's got massive, massive consequences. Next slide, please. Another example, a gentleman we prosecuted in Lancashire. He was a postman, lending money to people that he knew from his post round and also from the local pub. And he made over £300,000 in a 4-year period. Again, people believed they were his friend. So they believed he was doing right with him. But they had no idea what they'd borrowed, no idea what they'd paid back, or how ripped off they were being by this individual. And that's what we tend to see. Quite often people live hand to mouth, and it's not about looking at how much they're paying back. They're actually astonished when we sit down and say, look, you borrowed £2,000, you've paid back 18. And they do get really, really sort of astonished that that's what's happened, because they haven't got a clue that that's what's happening to them. Next slide, please. This is a very recent case last year, a guy we prosecuted from Doncaster, and this is how loan sharking is changing. So this is a guy who's never met any of his victims. He operated on Snapchat. He was a business student at Sheffield Hallam University, and he paid an influencer to recommend him to other people on Snapchat. He took money from bank transfer. He charged 100% APR, sorry, 100% interest, but you had to pay him back within a month. So if you borrow £200 on the 1st of March, you owe £400 on the 31st of March. You can imagine most people who need to borrow £200 on the 1st of March do not have £400 at the end of March. So what Mavunga would do then is lend you the £400, except you wouldn't see that £400. He'd just basically double what you owed him. So next month you owe him £800, the month after £1,600, and on it went and on it went. It's not uncommon for us to see people who borrow hundreds of pounds and end up paying back literally tens of thousands. That's not uncommon at all. And they start off thinking people are their friends, and it takes a while for them to realize that this is not a friend. This is absolutely not someone who is doing right by them. The guy had various sort of things that he did on Snapchat to threaten people, including taking a picture of people's houses just to sort of say, I'm around the corner, I could do something if I wanted to. And we see this a lot with loan sharks. The threats are very implied, they're not explicit. It's not, I'm coming around at 2 o'clock on Friday to break your legs, because then they've got nowhere to go. It's all about, oh, I found out where your mum lives. She's quite close to my mum. I'm there at the weekend. It'd be terrible if I bumped into her, wouldn't it? Or I know what school your kids go to. Isn't that a thing? And it's all very, very seedy and very implied. We've even seen people forced to do sexual favours as a way of paying back illegal lenders. If you can't pay me in cash, you'll have to pay me in kind. I'll send some men around, you service them, and the cost will come off your loan. So Mavunga was one of the most recent prosecutions, and we are seeing an increase in loan sharks heading onto social media. It broadens their reach, and they can make more money very quickly by having people pay in by bank transfer. Next slide, please. So a legal lender gives you paperwork, will not take security. Loan sharks might take your passport, your bank card, jewelry, or something else. Will give you a repayment figure, will not put people on the sorts of pressure loan sharks do to repay. Will negotiate if you struggle, if you go into debt, and will help people in financial distress. A loan shark does none of those things. They pride themselves on not having that. And we've even seen cases where they might have 50 victims and they'll find the 5 most vulnerable, and they're the ones that extort the most money out of, because they know it's easy cash, they know people will carry on paying, and they know they can control people whichever way they like. Next slide, please. So this is the alternative. This is the illegal lender. They don't care. They also add arbitrary charges, and you never get to pay them off. People come to us and they say, I'll pay him off, and then I'll come and talk to you after that, but they won't. They won't get to pay him off. He or she will reappear time and time again. Next slide, please. So the impact on your business, it may cause theft or fraud. Loan sharks are pushed into, loan shark victims are pushed to extreme measures. We had one chap who used to drive people to the Trafford Centre on a Friday and he'd give them a list to go and shoplift. And whatever they shoplifted, 10% of the value of the goods came off the loan. And he had this little sort of gang of people who were going out shoplifting for him. The similar thing with other workplaces. If your people are being threatened, if your family is being threatened, people will do all sorts of things completely understandably. I mentioned the sickness and the local authority in the south of England. It makes people less productive. It causes massive amounts of stress and has a massive impact on people's well-being, whether or not the lending is happening inside the workplace or external to it. Next slide, please. So this is something that we will do in sort of partnership with Manchester Credit Union. Credit unions are fabulous. They're absolutely amazing entities and they do brilliant work in helping communities with all sorts of financial issues, problems and solutions. So things that we will do is, for example, look at payroll deduction with credit unions. So this is where you can sign up as a payroll partner, and I don't want to steal Christine's thunder here, and we will support that journey, even with incentives where if people choose to save with the credit union, we can offer cash incentives for that process to go on. Oh, I've gone backwards, not forwards. Thank you. Credit unions are fantastic things and there's lots we can do to support them that Christine will talk more about, but please do bear us in mind with that. This is a letter that we had from a 7-year-old who had been through our lesson plans at her school and actually wrote to us about a loan shark that affected her mum, and they all hid behind the sofa. So what we do is safeguard families. That's my job, basically. My team, we don't actually care about the prosecution. We're not about the prosecution. We're about keeping people safe, and we do that very well. Next one, please. This is our access to help. So we've got a hotline that's 24 hours, 7 days a week. We've got various social media handles and a website, stoploansharks.co.uk, which has live chat on it as well. But as an offer from us, if you want us to come in and talk to your HR, we've done that with various organisations. If you want us to come in and train people who are dealing with staff, managers, or whatever it looks like, we are very, very willing to do that. We don't charge anything. We're paid for by central government. And if you would like us to have an input into your workplace to make sure that they are loan shark proof and to make sure your staff are supported away from illegal lenders, we are very happy to do that as well. Next slide, please. This is our app. There is a QR code available. This will be sent out afterwards. If you want to download our app, there's lots of resources there, access to the website. You can report a loan shark and also see testimony from victims that we've supported too. And next slide. This isn't my detail, as you will notice. So my colleague Joe actually covers Greater Manchester and half of the Northwest beyond that. So if you want access to training, if you contact Joe, she'd be very, very happy to deliver that, and any other incentives or things you think we can do together. We'll come and we'll provide freebies for people so they can have a Stop Loan Sharks pen so they can report anything they've got going on. But if you would like us to come and loan shark proof your business, we are very, very happy to do so. Next slide, please. So free training, leaflets, posters. If you want information about loan sharks, you want to go on our mailing list, we send out newsletters 3 times a year with what we're seeing, new trends, prosecutions, and so on. We run something called Partner Recognition Scheme, which you can apply for, which is about supporting people away from loan sharks. We've got community grants available, proceeds of crime money we give back to the community. So if anyone with another hat on is on a local community group and you'd like to know more about that, that launches next week. Have a look at our website. And we will be happy to look at applications for that as well. I think that's the last slide, Reed, but if you just check, sorry, that's it. Thank you. That was a very whistle-stop tour. That's normally an hour's presentation. But please do, get in touch if there's anything that we can do. And hopefully what I've done now is to press you greatly into the problem caused by loan sharks. And now Christine can tell you all what the answer is.
Thank you very much, Catherine. It was a very eye-opening presentation, and it's concerning to find out that 10% of illegal lending is happening right in the workplace. So hopefully your presentation has provided employers and employees with sufficient information to notice that and report it in the future. And thank you for the offer of coming into people's workplaces and providing an update. If anyone is interested in that, I think Leanne, my colleague, has shared her email address in the chat. So if you would like to get in touch with us, we can facilitate that with Kath and her team and ensure someone comes out to your workplace. So thank you, Kath. And finally, I would like to introduce our last speaker, Christine Moore. Christine is the CEO of Manchester Credit Union, so a large community credit union with 30,000 members. and the majority of whom live in the most deprived communities in Manchester. So Christine was actually the first member of staff at the credit union and has overseen its growth over the last 21 years into a thriving and sustainable financial cooperative, which lends in excess of 13 million to those who struggle the most and don't have access to the mainstream financial services. So Christine believes that through continued collaboration and cooperation, credit unions can really make a difference to communities. So I would now like to welcome you up, Christine.
Okay, thank you, Reet. Hello, everybody. I'm Christine Moore, Chief Executive of Manchester Credit Union. I'd just like to say I'm amazed at the work that the illegal money lending team do. We know Joe very well, the person who works in the Northwest, and we've had their training a couple of times, and it really is eye-opening, and I would recommend anybody to have that training for the staff, you know, just so they can look out for the signs and you know, try and recognise people who might be in the grips of loan sharks. We've had members in the past who've been members with us and still lent from loan sharks because they've not been able to get away from them. And we've done everything we can to try and persuade them to report them, but they've been so frightened they've sort of still carried on paying them. It's absolutely tragic, and I think there should be a much bigger team trying to tackle it. So I hadn't realised it had grown so much. Yeah, it's absolutely horrifying. Next slide, please. So I'm just going to do a quick rundown of what a credit union is, because amazingly, some people still don't know what they are. So they're a member-owned financial cooperative, and they exist solely to benefit the members and to improve their financial well-being. They help people become more financially resilient by offering an easy way to save and affordable loans when you need them. They work by everybody saving up, and then we use that pool of savings to lend to people who need to borrow. The different types of credit union, we're a community credit union, so anybody who lives or works in our common bond is able to join. The common bond is the restriction by which we can operate. So Manchester Credit Union's common bond is over half of Greater Manchester, and if you either live or work in that area, you're eligible to join. All the credit unions are linked to employers. So, for example, one of the biggest credit unions in the country is number one Copperpot Credit Union, based in Manchester, which you have to work in one of several police forces to join that. And we aim to become more well-known and become a leading provider of ethical financial services across Greater Manchester. There's also lots of other credit unions across GM. Some of us overlap each other, and some of them are workplace credit unions, like the Cooperative Family Credit Union, which is for people who work for the Cooperative Bank and other groups, the Cooperative Group and their families. So how do we, next slide please. So how do we differ from banks? Well, the first difference, the main difference I think, is save as you borrow, which is a unique thing with credit unions. And I don't know, as far as I know, there's nobody else that offers this facility. So if you join the credit union to get a small loan, you're encouraged to save while you're repaying that loan. So every time you make a repayment, maybe £1 goes into your savings. So by the time you've finished repaying that loan, you've got some savings built up. And some people, if they don't need another loan, continue to put the larger amount into the savings and build them up. And we currently look after about £14 million of people's savings in GM. So our loans have competitive interest rates. They're guaranteed, they're not representative. So because we know that other payroll partners quote low headline rates, but then actually when it comes down to assessing the loan, it's only if you've got if you're a homeowner or you have a really fantastic credit score that you might get that headline rate that they advertised. So we don't do that. We also lend really small amounts, so we can lend as little as £150, and you can't get that from any mainstream lender. You might be encouraged to use an overdraft instead, which, as we know, can get you into even more financial difficulties. Whereas a £200 loan from us, paid at £10 a week, will only cost you £16 and 3 pence in interest. And while you're repaying that back, that can also help to repair your credit rating. So any surplus that we make goes back to the members in the form of a dividend. You know, it doesn't go to external shareholders. So we either pay it back to members in a dividend, or we use it to improve services or build institutional capital. I can't see the end of my thing, actually. Can't see the last point on the slide, sorry. It's covered up by, just let me...
it's applications accessed by staff.
Oh, right, okay, sorry, yeah.
It's okay.
So although most people now apply online for loans, all of our loan applications are still assessed by a member of staff and not by the computer. We don't just look at the credit score and then discard them. We mainly look at affordability, and we lend to many people who can't get a loan elsewhere. But the main thing we look at is, can they afford to repay that loan? Because as responsible lenders, we're not allowed to lend to people who are already up to their eyes in debt and not paying their existing debt. Next slide, please. So Manchester Credit Union has been operating for about 30 years. We've currently got 4 branches, one in Manchester City Centre and then another one in Wythenshawe, Rochdale and Stretford. We've got in excess of 30,000 members now across the Common Bond. And since our inception, we've made about 220,000 loans totaling over £100 million. And we estimate that just looking at the small loans, we've saved £47 million in interest, saved people collectively over £47 million in interest. That's compared to a doorstep lender, and that's not compared to some of the other high-cost lenders like Wonga. The savings would be much more if you compared it to the likes of those. Next slide, please. Okay, community focused. We are community focused. In the beginning, credit unions in Greater Manchester were set up as an anti-poverty strategy by Manchester City Council. And as James has already said, if you have no savings in an emergency, people often to, oh gosh, sorry, I'm getting mixed up now with my notes. Yeah, sorry. I'm sorry, I'm not well at the moment, so I'm not thinking straight. I've got a temperature. Yes, we set up in Manchester as an anti-poverty strategy in communities where people couldn't get access to, and they didn't have anywhere to save, or they couldn't access a low-cost loan. And our particular credit union was set up in Beswick, which is one of the most deprived areas in Manchester, by members of the Church of the Resurrection. And credit unions were often set up by churches in GM, because it was people who were really struggling on benefits, who couldn't access mainstream credit, and people wanted to help them to find a way to do that. So we've got lots of partners in GM. We're one of the principal partners of Greater Manchester Poverty Action, and we are one of the partners of Stop Loan Sharks, of the illegal money lending team, and we also have the Money Helper information on our website. Next slide, please. Savings. I mean, we really believe that we help people to save in Manchester, and we want to make it as easy as possible for people to do that. As James has already said, if you have no savings in an emergency, you're much more likely to turn to a high-cost lender, because you panic, you want to get a loan in a hurry, and you don't see that you've got any other option. So I can't stress enough how much it helps people to have a little bit of savings. We once had a project years ago in East Manchester where people could buy a computer for £200, and we lent them £200, and they paid £5 a week, £4 off the loan and £1 in savings. And when they paid for the computer, they all had £50 in savings. But more importantly, they then carried on, a lot of them, saving that £5 and continued to build those savings up. And so many of them said to us, you know, they'd never saved a penny in their lives. And it really has an impact on their self-esteem to have that bit of a backup, knowing that, you know, you've got something in an emergency. So there's lots of ways for people to save by standing order. You can save directly through benefits, through the payroll, which I'll talk about later. But we also have, if you need to just save little bits of cash when you have it, you can pay through a post office or PayPoint or Payzone. Your savings are covered by the FSCS, the Financial Services Compensation Scheme, up to £85,000. But we also offer a free life savings insurance where anything you've saved up in the credit union is doubled to your next of kin if anything happens to you. That's up to a maximum of £5,000. And lots of our members who've been members for years really rely on that. They keep the savings in there intact so that they know that if anything happens to them, their next of kin has got enough money to bury them, which is something that people, I think, especially on low incomes, are very worried about, the cost of funerals. We pay an annual dividend on savings, and the Christmas Saver account is very popular, especially with employers. We have a lot of employers coming to us because they want to offer that option to save for Christmas to their employees. Next slide, please. Excuse me. The other thing I wanted to say just before I go into the loans is about the savings. Many people in Manchester, especially payroll savers, we have a lot of payroll savers, and some of them are our significant savers who save quite large amounts every month and have accumulated quite a lot of savings. And we've done focus groups in the past, and many of the savers are not really interested in the dividend on the savings, but they're very, very happy that they know that their money is going to help people in the local community. So affordable loans. As I said, we offer loans from £150, but we also go up to £15,000. The most popular reasons for borrowing are Christmas, home improvements, celebrations, funerals, but more worryingly at the moment, urgent bills. People are borrowing to pay urgent bills, which is awful, but obviously it's better if they borrow from us than go to a loan shark or a high cost lender. We also do debt consolidation loans, which, you know, a bit more risky, but they can really help people with the disposable income. You know, people have got lots and lots of debts and they're paying £50 to each one every month, trying to keep the minimum payments down. You know, it can help by having one smaller payment at a lower interest rate, and they can pay the debt off quicker, and at least they have an end date then with that, and then you've got more disposable income. We've recently gone on to an Experian aggregator site where you can go online and you know, like Money Saving Expert, Money Supermarket, who are also going to be coming on board this project soon. So that's actually introducing the credit union to a different audience who might not have known about us. So we were very pleased about that. Next slide, please. So we work in partnership with lots of people in Greater Manchester, all the local authorities that we cover, the NHS trusts, all the social housing providers that are in our area, but also with private companies who you know, are concerned about their employees' financial well-being, such as Timpson's. This is just a sample on this slide. And many employers approach us to offer the Christmas club, which I've already said. Social housing providers are some of our main partners, because as well as offering the payroll to their staff, we offer services to their tenants, and we work very closely with some of those. For example, at Northwoods Housing, we did used to have a branch in one of their housing offices. Unfortunately, since the pandemic, none of us, we had a load of satellite offices pre-pandemic in other people's premises, such as the Northwoods Housing Office and One Manchester Workplace scheme, but none of those have reopened since COVID, so we just have our main four branches at the moment. Next slide, please. So we've got a new payroll service called BeSmart Payroll Service. We've offered payroll deduction for many years, and in some ways we've struggled with it, to be honest, because although people like Manchester City Council are happy to do the payroll deduction, they have a lot of their staff who are members and pay through the payroll, that they've always been very reluctant to advertise loans. So if we've had some information that we want to send out about loans, they say, oh, well, we don't really want to, get people into borrowing. And we've tried to stress over the years, that we know, because a lot of them are our members, they're already using payday lenders or other high cost lenders, so they need to know that there's an alternative out there. You've already seen the information from James about just how much of the UK population don't save or have very little in savings. So the BeSmart is a bit different because it's all together on one site. So people could, there's an employers section and employees section. It's a totally free service, and it's a bit more, it looks a bit better than our old way on the old website as well. So there's absolutely no risk to the employer. It's very easy to set up. There's a service level agreement. We come along and we used to do lots of physical visits pre-COVID, and we're hoping we're going to be able to do them in the future. So we can come along to any staff conferences, staff meetings, team meetings, or any events that are being held, and have a stand and talk to people about credit union and how it can help them. And doing those things really helps to get people signed up once they understand what they're signing up for. So basically, they would join the credit union either through the website or at an event, and then the employer sends us a total amount of deductions for who, if there's 100 employees joined up and they're all saving £5 a month, the employer sends us one amount of money once a month with a list of who that money belongs to. And that's it really. Once the members joined up with us, their relationship is with the credit union, and there's no liability on the employer for anything. You won't know whether that person is just saving or whether they've got a loan. That relationship is between the credit union and the employee. So lots of people join up to save, but also people join because they need a loan at the time. But as I said, if they do join up for a loan, they have to save then while they're repaying the loan back. So it's totally free to employers. It's a bit of a no-brainer really. Why would you not offer this to your employees? Because it's shown that financial stress has a direct impact on absenteeism, poor work performance, and lots of other things. So, it's really popular. We hope that more people will do it, because we think that, as well as providing the option, as providing the ability to save directly from pay, which is, if it doesn't go into the bank, you're not tempted to spend it. It goes directly out of your wages. It's much easier to save like that, and it's amazing how quickly it's out of but it also means that once they're in the credit union, if they do need a loan in a hurry, they know where to turn to and they can get one from us. I think that's the last slide, is it? Mute. So Yeah. So, but it's not just about the BSmart. You know, anybody can join the credit union as an individual. So anybody on the call who's not already a member and who is in our area, you know, please think about joining. But also, think, you know, if you're not in our area, think about joining one of the other credit unions. There's a Find Your Credit Union website which you can put your postcode into. So there might be more than one credit union that you can join. And if you want to start offering the BSmart payroll services to your staff, contact Dawn, who's our new business development and marketing manager. Thank you.
Thank you, Christine. It was really good to understand more about the Save As You Borrow facility, and thanks for the update on the BSmart payroll service. I know this will be extremely useful to many employers and employees across Greater Manchester. So we will be sharing, as I mentioned at the start, we will be sharing the slides with all of the attendees, so everyone will have access to all the information that we've discussed today. And we've just got a couple minutes left for a question which has just come through from Amma. So Amma is from the Financial Wellness Group. She said, we are a debt advice provider based in Manchester. We're listed on the Money Helper website as a source of free independent debt advice should people be in difficulty. So this question is aimed at Christine. She's keen to understand how MCU support these customers who have a loan but fall into financial difficulty. Is there anything that you can share about how you work with debt advice providers, please?
We do work with a lot of debt advice providers, both charities like Step Change and all the other ones, but also ones that people pay for, you know, because people often go to debt providers, and actually it's hard to know which is which, to be honest. So we've got a lot of people currently who are on reduced payments who have gone to one of those organisations. What was the question? How we work with them? Sorry.
Yeah, it was just keen to understand how you'd support those customers who've fallen, who have a loan but fall into financial difficulty. So if there's anything that you can share to work with them on debt advice providers.
Yes, we have. I mean, we have all the Money Helper information on our website. We signpost people to a range of debt advisors, and we first of all, before it gets to that stage, we really bend over backwards to help people. You know, there's a range of things we can do. We can reduce the payments, we can renegotiate the loan, we can stop the interest, we can, I mean, we do absolutely everything we can. I mean, we've been doing a lot of payment holidays recently. You know, as you can imagine, throughout COVID, lots of our members have been furloughed, you know, just by the nature of the low incomes and work they're in. You know, it has affected a high proportion of our membership. So as long as people contact us, we can do absolutely anything to help them out, you know, and we do end up having to write quite a bit of it off, actually, to be honest. I mean, that's one of our biggest costs in the credit unions, is writing loans off. I mean, we do struggle at the moment with these, you know, there's lots of people going into IVAs who probably shouldn't be going into an IVA because they don't have any assets or anything, you know, and this, you know, business of companies contacting people and trying to, you know, get them to go bankrupt or do an IVA is really bad. So yeah, we do everything we can, and we work with the companies to help wherever we can, because it's yeah, it's in our interest to keep the members happy, and they're our members, and we're here to support the members, and we, you know, just bend over backwards to help them. Yeah.
Thank you, Christine. So the event is going to come to a close now, so I just wanted to say a huge thank you to all of our speakers, James, Kath, Christine, and thank you for those of you who've attended this morning. As mentioned, we will be sending out a summary email following this, so you'll have access to everyone's information and access to how to get in contact if you have been interested in speaking to any of the speakers directly. So thank you for attending, and enjoy the rest of your day.
Thank you.
Thank you, and thank you for the invite to attend. Cheerio.
Yeah, thank you.